Nigeria's Central Securities Depository, the Central Securities Clearing System plc, held its 23rd annual general meeting to engage shareholders on its 2016 financial year performance. Given the independent auditor's report, Mr. Olufemi Awotoye of KPMG Nigeria said the CSCS Plc kept proper books of accounts for its 2016 financials in accordance with the Company and Allied Matters Act.
We have audited the consolidated and separate financial statements of Central Securities Clearing Systems Plc, the company, or CSCS, which comprise the consolidated and separate statement of financial position as at the 31st of December 2016, and the consolidated and separate statement of profit or loss and other comprehensive income, consolidated and separate statement of changes in equity, and consolidated and separate statement of cash flows for the year then ended, and a summary of significant accounting policies and other explanatory information which are set out on pages 48 to 108. In our opinion, proper books of accounts have been kept by the company so far as appears from our examination of those books, and the company's statement of financial position and the statement of profit or loss and other comprehensive income are in agreement with the books of account. The audit report is signed by me, Oluwafemi Awotoye, for KPMG Professional Services, and it is dated the 30th day of March 2017.
Chairman of the Audit Committee, Mr. Yomi Adeyemi, in his statement also affirmed that the accounting and reporting policies of the company for the 2016 financial year conformed to legal and ethical requirements.
In line with the provisions of Section 359, subsection 6 of the Companies and Allied Matters Act, Cap 20, Laws of the Federation of Nigeria 2004, we, the Audit Committee, hereby state as follows. 1. That we have reviewed the audit plan and scope and the management letter of the audit of accounts of the company. That the audit plan and scope for the year ended 31st December 2016 are adequate in her opinion. That the accounting and reporting policies of the company conform to legal requirements and ethical practices. 4. That the internal control and internal audit functions were operating effectively. Dated 21st February 2017. Signed by me, Yomi Adeyemi, as the chairman of the Audit Committee.
Shareholders had the opportunity to make contributions and ask questions.
I want to say that, or congratulate the board, for being able to, come out for the meeting. And this is an evidence of, some effort that have yielded good result. That is why, the board can be, bold enough to stage an AGM.
What we are witnessing now is that our regulators gradually are turning themselves to another revenue agencies, using big fines at every available opportunity. That is not encouraging to the capital market.
The way a market behaves and the impact on companies is not only driven by one entity. It is driven by policymakers, regulators, and the operators.
The Chief Financial Officer for CSCS Plc also shared insights into issues related to the company's financial position.
The business of CSCS are practically in two areas: market-related activities, from where we earn depository fees and transaction fees. Then there are other auxiliary services for which CSCS also gives some services, co-location services, data management. Data management and co-location services account for other income that the company receives. You'll recall that in 2016, the economy was really down, and the companies that will provide these services to were not as forthcoming as they were. However, the company also is working on other areas of ensuring that the activities of both on the capital market and other areas do not significantly affect our financial performance in any given year. If you read through the reports, particularly the chairman's address, you will notice that there are other businesses that the company is working so hard in taking on. The pension contribution management system, the insurance repository, the NG clearing, which is the central counterparty clearing system, are all efforts geared towards ensuring that other income contribution to the bottom line of the company do much better than they have done, and also are not significantly affected in total by the condition of the economy at any given year.
Mr. Oscar Onyema engaged shareholders on the decision to pay the 21 kobo dividend.
I want you to know that the board is taking seriously your request to update our dividend policy. As you know, our dividend policy calls for 30%. And the board has discussed this extensively. The board is still doing some work. I want to assure you that in the coming months, this year, we'll be announcing a new dividend policy that takes into consideration your agitations. Having said that, the things that we considered for the dividends that we're putting forth today, the first one is that our net revenue decreased significantly from 5-point-something billion to 3-point-something billion. If you look at the operating revenues, we did not meet our target because of the challenging. So we actually met our targets with regards to the efficient use of the cash that we have. And when we now said, okay, let's pay out in dividend, we noticed that the excess dividend tax kicks in, and it would have amounted to giving money to the taxman. So that's why we've been debating. We've had some professionals, tax accountants, all kinds of people looking at it to see how best we can get that money to you without giving most of it away to the taxman. And we'll certainly be coming out shortly with a new dividend policy.
The chairman of CSCS Plc and the interim chief executive officer speak further on the 2016 financial year and outlook for 2017.
You know, the 2016 financial is in a backdrop of a very difficult year for the nation. So the macro story was very challenging. And CSCS was not immune to that environment. And so that is what is reflecting in our operating income numbers. The transactions that occurred in the exchanges like Clear at CSCS were significantly lower than what we experienced in other years. And that affected us. And transaction revenue is a major part of our revenue composition. Another area that affected us was depository fees, which is charged to companies that use the facilities of CSCS. Now, these depository fees are based on market capitalization, and with significant reduction in the NSE All-Share Index, that meant that the market capitalization of a lot of those companies went down as well. That affected the revenues of CSCS. So those were the two things that actually account for the reduction in profitability that you saw. However, we continued to manage our treasury very efficiently, and the revenues from treasury helped to make up and allow us to declare a net profit of 3.5 billion naira.
Again, not to belabor the point, they just spent quite a bit of time at the AGM detailing out how, despite all the, I think the word that was used a bit was the demand by the shareholders to get more, because that's always the case. We needed to be very responsible in the way we go about it. So for this year, we certainly still had to stick with what the dividend policy was. But going forward, the commitment that was made was that we'll go back and take the feedback that was received from the shareholders, while balancing that with the need to manage the resources of the firm prudently. But certainly, the one commitment that was made very clearly was that on the back of this analysis would be a revision to the existing dividend policy.
2017, you should be expecting to see us fully completing Project Meridian, which is a new state-of-the-art clearing technology. You should expect to see us completing some of the initiatives that we have with regards to diversifying revenue streams. And you should expect to hear us announce a substantive CEO. We've been going through a process that is very transparent and auditable. And then the last thing that you should also expect to see us do, and perhaps the most important thing, is that we should be back with regards to operating revenues. As you know, the economy is taking a positive turn, and we're seeing activities in the market ginger up, which would directly positively impact CSCS as well.
Despite a challenging year, the CSCS Plc took a bold step by paying 21 kobo dividends to shareholders. With the planned review of the dividend policy and strategic initiatives in place, shareholders will be eager to see an improved dividend package in 2017.